While retail investors were watching the price, the biggest XRP holders were buying billions, not millions, billions. At the same time, institutional money continued flowing into XRP investment products, while much of the market remained distracted by short-term volatility. That creates a question that every investor should be asking. Why are sophisticated participants increasing exposure while uncertainty still dominates the conversation? Because history shows something important. The biggest moves often begin before the majority notices them. By the time the headlines become overwhelmingly positive, much of the opportunity has already passed. And right now, a growing number of signs suggest that something unusual may be happening beneath the surface of the XRP market. The media continues focusing on the same story: daily price action, short-term volatility, temporary fear, temporary optimism. One day XRP is the future. The next day XRP is finished. The narrative changes every week, but serious investors do not build positions based on weekly narratives. They focus on data. They focus on capital flows. They focus on behavior. And behavior tells a very different story from the one dominating many headlines. Recent data shows that wallets holding at least 1 million XRP now control a significant portion of the available supply. More importantly, those wallets have continued accumulating. Think about what that means. Large holders had every reason to remain cautious. They could have waited. They could have reduced risk. They could have sold into uncertainty. Instead, many chose to increase exposure. That is not random. That is a calculated decision. And calculated decisions backed by significant capital deserve attention. This brings us to the first major point. Whale accumulation matters more than most investors realize. Many people hear the word whale and immediately assume manipulation. That is not necessarily true. A whale is simply a participant with substantial resources. What matters is not their size. What matters is their actions. When large holders sell, supply increases. When large holders accumulate, supply becomes tighter. That basic principle has influenced financial markets for generations. The same principle applies here. Over recent months, more than 1 billion XRP has reportedly moved into the hands of major holders. That happened during uncertainty, not during euphoria. That distinction is critical. Buying during excitement is easy. Buying during doubt requires conviction. Conviction usually comes from research, from information, from analysis, or from a longer time horizon. Large investors often think differently from retail investors. They do not focus on next week. They focus on the next year, sometimes the next several years. That perspective changes everything. When most investors see volatility, they see risk. When experienced investors see volatility, they often see opportunity. That difference explains why accumulation phases frequently occur when public sentiment remains mixed. The second major point involves institutional money. This part of the story may be even more important. For years, institutions remained cautious toward digital assets. Some wanted regulatory clarity. Others wanted market maturity. Many simply preferred to wait. Today, the landscape looks very different. Investment products linked to XRP continue attracting attention. Capital continues entering the ecosystem, and institutional participation changes market dynamics. Institutions do not allocate money casually. They employ analysts, research teams, risk management departments, investment committees. Before capital is deployed, extensive evaluation usually takes place. That does not guarantee success. No investment is guaranteed, but it does mean decisions are often based on detailed analysis rather than emotion. That is why institutional activity deserves attention. When professional investors commit resources, they generally believe the potential reward justifies the risk. Right now, the behavior of institutional capital suggests growing interest in XRP. This creates an interesting contrast. Retail sentiment remains inconsistent. Professional positioning appears increasingly confident. One group reacts, the other prepares. One focuses on recent price action, the other focuses on future possibilities. Markets frequently create opportunities when those two perspectives diverge, and that appears to be exactly what is happening today. The third major point may be the most important: supply and demand. Every market eventually comes back to those two forces, not narratives, not emotions, not social media debates, supply and demand. If large holders continue accumulating XRP while institutional participation expands, the amount of available supply could gradually become more limited. That matters, because price is ultimately determined by buyers and sellers. When demand rises while available supply becomes increasingly concentrated, pressure begins building. This does not guarantee immediate upside. Markets rarely move in straight lines, but it creates conditions worth monitoring. History shows that major market moves are often preceded by structural changes, ownership changes, capital flow changes, participation changes, and those changes usually occur before the broader public recognizes them. That is why focusing only on charts can be dangerous. Charts matter, but ownership matters too. Capital flows matter. Positioning matters. The investors who understand those factors often identify opportunities before the crowd. Now consider the broader implications. If the current trend continues, the XRP market could look very different over the next several years. The first implication involves confidence. Confidence is one of the most powerful forces in financial markets. Not blind optimism, not hype. Confidence based on evidence. When investors see whales accumulating and institutions participating, confidence can increase. That confidence attracts additional capital. Additional capital creates additional attention. Additional attention creates additional demand. That process can become self-reinforcing. The second implication involves perception. Markets are driven by perception as much as reality. An asset can remain undervalued if perception remains negative. Likewise, an asset can experience dramatic appreciation if perception improves. The current accumulation trend suggests some sophisticated participants may believe XRP is being viewed incorrectly by the broader market. Whether they are correct remains uncertain, but their actions clearly indicate belief, and belief backed by capital carries weight. The third implication involves competition. The digital asset sector remains highly competitive. Thousands of projects compete for attention, investment, and adoption. In that environment, sustained accumulation stands out. Capital is selective. Large investors have choices. If they continue directing resources toward XRP, that decision itself becomes a signal, not a guarantee, a signal, and signals matter. Now let us talk about risk, because every serious analysis must acknowledge uncertainty. Too many commentators present certainty where none exists. Markets are uncertain, always. That reality never changes. Whales can be wrong, institutions can be wrong, analysts can be wrong. Anyone claiming otherwise does not understand markets. There are risks, macroeconomic risks, regulatory risks, liquidity risks, market sentiment risks. All of them remain relevant. Investors should understand that accumulation alone does not guarantee future performance. However, ignoring accumulation entirely would also be a mistake. The goal is balance, understanding opportunity while respecting risk. That is what serious investing requires. Now let us move to the first prediction. If whale accumulation remains strong and institutional participation continues expanding, XRP could experience a significant revaluation over the medium term. Notice the word revaluation, not speculation. There is a difference. Speculation creates temporary excitement. Revaluation occurs when investors fundamentally change how they view an asset. That process can be powerful because it changes capital allocation decisions. When large groups of investors begin reassessing value, demand can increase rapidly. The current accumulation trend suggests some participants may already be preparing for that possibility. The second prediction is equally important. Volatility is likely to remain elevated. Many investors assume positive developments eliminate volatility. History suggests the opposite. Major transitions often increase volatility. As investors attempt to determine fair value, price swings can become larger. That means patience will remain essential. Some days will look extremely bullish, other days will look extremely bearish. Neither necessarily changes the long-term picture. What matters is whether the underlying trends continue. Are whales accumulating? Is institutional participation growing? Is adoption progressing? Those questions matter far more than daily price fluctuations. Ultimately, the story unfolding around XRP today is not really about a single headline. It is not about a single week, and it is certainly not about a single price target. It is about behavior. It is about positioning. It is about sophisticated participants making decisions that appear very different from the dominant public narrative. While many investors focus on short-term uncertainty, major holders continue accumulating. While some investors remain cautious, institutional capital continues showing interest. That divergence is difficult to ignore. Maybe the whales are wrong. Maybe the institutions are wrong. That possibility always exists. But one fact remains undeniable. They are acting. And actions matter more than opinions. The coming months may reveal whether this accumulation phase was simply another chapter in XRP history, or whether it was the foundation of something much larger? That is the question every XRP investor should be watching closely. Do you think the whales know something the rest of the market does not? Or do you believe this accumulation is being overestimated? Let me know in the comments below. If you enjoyed this analysis and want more XRP coverage every week, make sure you subscribe. I will see you in the next one.